The financial landscape today offers a fascinating interplay of political and economic dynamics. European shares, particularly in Paris, have surged following an unexpected lead by the far-right national rally in the first round of legislative elections. This surprising political shift is creating ripples not just across Europe, but also influencing global markets, including Asia and the US. As investors react to the unfolding political scenarios, questions arise about the broader implications for economic stability and market trends. How might these political changes shape the future of global markets, and what should investors be mindful of in these turbulent times? Stock market today, political waves ripple through global markets. The European stock markets opened the week with a notable surge, driven by the unexpected political developments in France. The benchmark index in Paris, the CAC 40, soared by 2.8% as the far-right national rally secured a strong lead in the first round of legislative elections. This significant political shift has sent waves across the European financial landscape, influencing markets and currencies alike. European markets react. The Parisian Stock Exchange experienced a remarkable boost, with the CAC 40 reaching 7,688.20 points. This was largely attributed to the electoral gains of the national rally, which raised speculations about potential shifts in economic policies. Germany's DAX also saw a positive movement, climbing 0.9% to 18,394.56, while London's FTSE 100 rose by 0.6% to 8,209.97. The euro showed strength, climbing to $1.770 from $1.744, as polling agencies hinted at the possibility of the national rally winning a majority in the lower house of parliament. However, the outcome remains uncertain due to the complexity of the voting system. Economists at ING Economics suggested that the gains were partly due to relief over the far-right parties not exceeding expectations. They noted that the real risk event would be the second round of elections scheduled for the upcoming weekend. Asian markets and economic data. In Asia, markets showed mixed responses. Japan's Nikkei 225 added 0.1% to 39,631.6, buoyed by a Bank of Japan survey indicating a modest improvement in confidence among large manufacturers from April to June. Despite this, the government downgraded its growth estimate for the first quarter to a negative 2.9% annual rate, compared to an earlier figure of negative 1.8%. This adjustment was aligned with predictions of a renewed slowdown in GDP growth, consistent with a slump in industrial production expected in June. In China, the Shanghai Composite climbed 0.9% to 2994.73, reflecting mixed signals from factory purchasing managers' surveys. While the official survey indicated ongoing contraction, a private sector survey showed a slight improvement in business conditions. The KX manufacturing PMI rose to 51.8 in June, indicating expansion compared to the previous month's 51.7. Meanwhile, South Korea's KOSPI edged up by 0.2% to 2004.31, supported by a private sector survey that highlighted the best factory activities since April 2022. However, Australia's S&P/ASX 200 experienced a slight decline of 0.2%, settling at 7,750.70. U.S. markets, tech stocks, and inflation. U.S. markets closed the previous week on a downbeat note. The S&P 500 fell by 0.4% to 5,460.48, and the Nasdaq Composite dropped by 0.7% to 17,732.60. The Dow Jones Industrial Average saw a marginal decrease of 0.1% to 39,118.86. Despite these declines, both the S&P 500 and Nasdaq remain near their all-time highs, with the former gaining 3.5% in June and up about 14.5% year-to-date, and the latter up 18.1% this year. A pullback in major technology stocks contributed to the overall decline. Apple fell by 1.6%, Microsoft by 1.3%, and Meta Platforms by 3%. This pullback was somewhat offset by positive news on inflation. The latest personal consumption expenditures, PCE index showed consumer prices rose 2.6% in May compared to the previous year, continuing the easing trend from April's 2.7% and significantly lower than the 7.1% peak 2 years ago. Crude oil and currency movements. In other financial news, crude oil prices saw modest increases. Benchmark U.S. crude rose by 60 cents to $82.14 per barrel, while Brent crude, the international standard, added 57 cents to $85.57 per barrel. The currency market also experienced significant movements. The dollar strengthened against the Japanese yen, trading at 161.4 yen early Monday, up from 160.80 yen late Friday. This strength was reflective of broader economic trends and investor sentiment. Looking ahead, as the global financial landscape continues to react to political and economic developments, investors are left contemplating the future. The results of the second round of French elections, the ongoing adjustments in major economies like Japan and China, and the continuous monitoring of inflation trends in the U.S. will all play crucial roles in shaping market directions. As we navigate these turbulent times, the question remains, how will these political and economic shifts impact global markets in the long term? Share your thoughts and insights on these unfolding events.